Hello, this is Patrick White from AA Commodities and Investments with your Monday, September 23rd market recap video. As you can see here, we had corn up 2.5 cents on December at 373 and a quarter. November beans were up 9 3/4 to close at 892 and a half, and D Chicago wheat was down 1 1/4 cents to close at 483. Going to go ahead and get it started off with disclaimer. Just remember that everything I'm talking about here is just my opinion and that there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. All right, as you can see here, we had markets relatively higher here on corn and soybeans here on the day. Soybeans have had a pretty significant rally here in these last couple of weeks. I sent out the soybean advantage alert today, so if you're on my newsletter, you got that phone call here today. So taking a look, we had the advantage indicator go into the overbought status here earlier this week. I didn't send out the advantage indicator or the advantage alert because we had lower closes. With that being said, though, the high in here today tested some of those areas where we were at, on the 17th and 18th there of September. With that being said, I think between 899 and 905 is probably an opportunity for you to get some soybean sales on. Anything past 905, we're probably headed up to 920, and then on up to like the 935, 940 region. So I think, it's pretty prudent to take advantage of this 40-plus cents that we've seen here since the lows here on September 9th. I think it's prudent to take advantage of those 40 cents and sell a little bit here, maybe 10% of your old crop, 10% of your new crop on soybeans. Obviously, I don't think this is a high for the year. We've certainly been higher. I'm not too crazy excited about the soybean, prices at this time, but, I don't want to give away a 40-cent rally there either. So just be mindful of the soybean prices here over time. With that being said here too, we'll take a look at, like D's corn. We're getting into closer to an advantage alert. Obviously, we're out of the buy signal, the green dots there, but getting a little bit closer. I think if we rally up to like 381, 382 region, we should be able to get an advantage alert there, but I'll keep you posted. Anyways, going back into the charts, December corn, really still struggling with the 374, 375 level. We've tested that about 4 or 5 different times here and failed from there. Definitely some sellers up there. There's probably a lot of farmer offers up there at 375 as well. Really haven't gotten the fundamental catalyst to rally the market above that region. I think if we do, like I said before, we're probably headed back up to this 381 mark. That probably wouldn't be too hard to attain here if we broke above 375. If we get above 381, and keep in mind, at every level, there's going to be selling pressure. If we get above 381, my ultimate target here for this fall is 393, and that would go back, and that would fill in this gap that we saw on the 12th and 13th of August. So kind of some levels to be mindful of there. Taking a look at soybeans again here. Obviously, sent out the advantage alert. We had a pretty decent rally going today, and we closed up 9 3/4 cents. Obviously, we've been up 40 cents here from this low on September 9th, and, still fighting in this somewhat of a downtrend here. We had a short-term uptrend followed by a bull flag formation. Now we're trying to break that bull flag formation. So if we can get above this $9 to 905 mark, look out. We're probably headed up to this 920 to 935 region. So I think it's prudent to get some sales on here, like I said before, and look to break this $9 psychological level as well as that trend line there. D Chicago wheat. Well, I should preface this by saying Minneapolis wheat has been leading the rally in the wheat market. Over the weekend, we got some reports that 75% of wheat in Saskatchewan has yet to be harvested, and it's starting to sprout out in the field due to the wet conditions. North Dakota is having the same issue, except for they've got 3/4 of their wheat crop harvested. So continuing to see, higher than normal precip out there. It still has been warmer than normal, but, certainly not good for the spring wheat producer, in North Dakota and Canada there. So with that being said, though, wheat rallied like 13, 14 cents today. Chicago wheat can't do a dang thing. We're down penny and a quarter. I'm looking at this like, 481 mark. Well, here I'll show you. On the 90-minute chart here, basically we've traded between 481 and 491, 492 since, we'll call it the 12th of September. So there's definitely a lot of, long people, in this range, long and short. I think if we do get below this 481 region, the people that are long up here since the 12th of September are going to start to liquidate. So if we get a close below this 481, 480 mark, we're probably going to see some further follow through selling. Other than that, if we don't break that, we're probably still inside of the trading range, and we'd look to rally up to the 492 level and get a break above that for a breakout. So those are the two levels that I'm watching in D Chicago wheat. Cotton kind of goes along with the soybean market here. We had our initial push higher. And we had a little bit of a bear flag / little mini downtrend. Went down and tested that $60 mark. If you look here, the day, the low for the day was 60.13. That was about 13 ticks higher from the breakout level here at $60. That's also, a relatively important psychological level for DC cotton. Nice to see that market go right down and test that and get a nice bounce and find some buying there in the low 60s. That being said, though, it wasn't a very convincing close. They were up to 61.67 on the day on the high for the day. But we only got a close at 60.91. So pretty decently. A close decently off the highs there. Not terribly bullish, but not terribly bearish either. Just some bottom picking action for the move, just on the top of this range breakout. If you can't tell, those are my personal favorite trades. Going into the hog market. Obviously had this range here set up in August and the beginning part of September. We had we've got support in here at like the 65.90 to 66.30 mark. Obviously, we went in there last week on the negative Chinese news, and we held that level here today on the gap up on the more positive Chinese news. So I'm looking for the $66 mark to hold us here in for December hogs, and I think we're going to see resistance up at 70.5. If we can get up there, my ultimate target would be that 74 region. Excuse the trade station alert there, but I think if we break above this $50 mark, that would be also, above prior resistance in the 200-day moving average. We could get to the 74 region pretty fast there. Going into the final chart for the day, December live cattle, really kind of a interesting chart from a support and resistance standpoint. We had a bullish cattle on feed report here that came out on Friday afternoon. Let me see here. We had 99% of cattle on feed versus 99.3 expected versus last year. Cattle placed were just at 91% versus 94.1% expected, and I think that was the figure that rallied the market here. So obviously, we rallied up out of the hole here. Starting on the 10th of September last week, we saw sellers come in at 106.30, and that corresponded with the sellers that came over here, in late August. And what happens? Well, we get a bullish cattle on feed report on Friday. After we close well inside the range. And where do they gap up to? Well, the old resistance, top of the range, 106.30. I guess they truly opened at 106.25. But and then where do they go to? Right up to resistance, right at the 50-period moving average, up to that 107.80 to 108 mark. So, pretty interesting. Markets tend to gap around support and resistance level, like we saw the gap around the $62 and $60 mark in the hog market here in October as well. So, something to keep an eye on, something really interesting as far as the charts go. So that's about all I got. If you guys want to give me a call and talk markets, you can do so at 712-262-7606. Otherwise, you can visit us at aa-commodities.com. And thanks for watching today. Appreciate it.